We're here today with Ed Finn. Ed, could you tell some of our subscribers of the China Stock Digest where you see China going over the next 5 to 10 years?
I think the China story over the next 5 to 10 years will be terrific, just like it has been the last 5 to 10 years. The question, of course, for the investors is where are the investments valued? As you know, there's been quite a mania with making the best stock market in the world in the last year, and in the last couple of weeks you've seen it come down a little bit. I don't think that takes anything away from the fundamental, strong economic story of China, but the question is, have the stocks become too highly valued relative to earnings, which is what we at Barron's always look at. How higher prices relative to earnings.
So you feel long term it may be a good story, but over the short term we may have some choppiness.
My guess is we're not going to see another 130% year.
Right.
And actually my hope is we're not going to see another 130% year. I like to see stocks go up as much as the next person does, but to some degree that can be unsustainable if the advance of prices gets ahead of fundamental values, which are determined by how much money the stock is actually making, the company underlying the stock is actually making. And at the moment, I think people are talking about PEs in China being about 33. In the United States, it's more like 15 or 18. And you can see China having a higher PE because corporate growth and profits is much higher. But how much higher and how dependable are those corporate accounting figures? Those are some of the questions that American investors are weighing about China right now.
Now, Ed, how do you see the China story continuing to play out for U.S. businesses? In other words, do you see it having a bigger impact on earnings in the U.S. as China continues its development?
I think so. Every year I talk to probably 50 to 80 CEOs of major American and European and Asian corporations, and to a person, they are almost all devising China strategies and have been for the past decade. And that involves having operations in China, selling to China, exporting from China. China is such an economic superpower that you can't run a major global corporation without having a strategy there. And a lot of American firms particularly are very bullish about what's going on in China because a lot of the things that we make so well, be it computer software or movies or jet engines, are in great demand in China because of the growth in the economy.
Do you think more and more American companies are getting the China story and getting it better as far as doing business there?
I think so. I think they are. Of course, there's competition with India, which is the other big economy, and the people are always deciding how much to invest in India and how much in China from a corporate standpoint. But I think most every major corporation is investing in both countries and will weigh it carefully. And so far, I think the Chinese leadership has been very open to foreign investment. I think that more opening would be better, but I think it will take time.
Well, thank you very much for joining me this morning.
Thank you. My pleasure.